Hey guys, G-Force team here. In today's real estate market, you hear a lot about multiple offers and multiple offer situations. Well, today we're going to take you behind the scenes and show you just a little bit of what goes into that. Follow us. All right, step number one is to actually print out all of the offers. An offer is typically 20 to 30 pages long, depending on how it's been written and the supporting documentation that's been sent along with it. So that's what we have here. In those 20 to 30 pages is basically, it's a bunch of legal jargon that's kind of standard. It doesn't change from offer to offer. And in between, there are spaces for us to change things like price and all different kinds of terms. So what we do is we go through the offer and we use a summary sheet, and it helps us greatly when we're comparing multiple offers. So for this house in particular, we have a total of 15 offers. Now we've gone through and summarized all of those. We have our summary sheets filled out. One of the great things about our summary sheets is it puts all of the important information in one spot, but it also helps us determine where there's issues with an offer or where there's inconsistencies, things that just don't sit well with us. This is where we reach out to those agents and those lenders and ask questions and figure out what's going on and see if we can get the correct supporting documentation. We've split that up, so we're gonna go ahead and do that, and then once we have answers, we'll get back to you.
It wasn't that long ago that it was required to put 20% down. If you didn't have 20% down, you saved, and you saved, and you saved until you did. Things got looser in the 90s, and it got way, way looser in the early 2000s when things got to a zero down. And gosh, there were so few regulations at that point that led us to the crash, the last recession, and this and that, it seems. Today's a little more stringent, but there are flexible programs. 3% down, 3.5% down, 5% down. None of those are bad, but when we're reviewing offers for our seller, it's a sign of strength when the buyer comes in with a lot down, or at least they have the assets. It's okay for 5% down if they have assets to cover a bump in the road. So if they have more in a 401k that they could draw on, or just cash in the bank, that's a great thing. It's really cool to have a low down to preserve your capital for other things. But if you can show your strength to a seller, a big down payment's one way to do it.
Okay, so there is a difference between a pre-qualification letter and a pre-approval letter, and they are a huge difference. So your pre-qualification letter, if you're looking at it from your lender, basically is going to say that you've been pre-approved for a certain amount, and you're going to put this much down, and this is going to be your interest rate. Then down at the very bottom, it's going to say, but this is all contingent upon us verifying your income, verifying your funds, verifying your FICO scores. That is a pre-qualification. Basically, they've done that one over the phone. Now, a pre-approval, when you get this pre-approval, it's going to say that you are approved because you've sat down, you've done a loan application with the lender, you have shown them your source of funds, you have shown them your paycheck stubs, they have all your FICO scores in front of them, and they've made this whole form out, and at the bottom it's going to say that this is contingent upon an appraisal verification of the property. That's the big difference. If you have a pre-qual, that's not very strong. Matter of fact, it's not strong at all. A lot of times we won't even look at those. Okay, so if we're looking at an offer and the offer is in one person's name and the bank statement is in another name, or we've just got a screenshot and there's no name, that's going to put up a lot of red flags. What we need to see is we need to be able to verify that this is your bank account and you are actually on it. Because let me tell you, the investor, when they go to approve this loan, is going to be checking for 3 months worth of bank statements that show that all this money's been in there and that it's seasoned. So what you need to do is make sure when you're giving a bank statement to your agent that is going to give that to a listing agent, that all of the verification information is already on there or it will get kicked back to you. So you guys, it's really important that as your realtor, we are doing a lot of homework on these offers. So as we're looking at this offer, we need to make sure that we fill all the holes. Some of that homework is going to be checking in with the lenders, going to be checking in with the agent. And by the way, we hope that those lenders and agents get back to us before we go to our seller and present counteroffers. What we want to do is we want to see where we can plug those holes. Let me just tell you about this offer I have sitting right in front of me. So I'm calling the lender. Everything appears to be good. I call the agent, and the agent says, oh, you know what? My clients put out multiple offers and you're their third choice. Now, really? Do you think we're going to take somebody's third choice to our sellers and say, this is your best offer? I don't think so. Don't think it's a good idea to be putting out multiple offers, or at least telling the listing agent that you have. But that's the importance of us going through these offers line by line and plugging those holes. I have one good one. Even the one that's a really good one still needs more confirmation. It's proof of funds aren't adding up to the money that's needed to close, but the agent's telling me she's going to get that to us. So I'm saying this is a contender. I'm going to put that in. Some of the other ones, I definitely have holes in the sources of funds, where the bank statements are not, then the name on the offer is not the same on the bank
I'm
statement.
crazy about sloppy agents.
Right.
Because every one of these offers has just sloppy mistakes. They submit an offer and they ask for a home warranty with pool and spa coverage. This house doesn't have a pool. So why did they put that in there? Is this the right offer? Is this the right house they're on? Or is it just the agent just checking boxes and not paying attention?
Yeah.
The last thing you want is to be in a transaction on a home purchase, that they are sloppy.
Like I have a pre-qual here, and the lender says he's not even working with this guy anymore. So that goes in a bad
Red
pile.
flag, yeah.
Agent says this is the buyer's third choice of home. They put out 6 offers. That's going to make the client feel really good that they don't want the house that bad. Yeah, and this offer looks really good, but it's a weak pre-approval. It says pre-approval, but it's more like a pre-qual taken over the phone. They haven't verified assets, they haven't verified income, and they haven't even looked at their FICO score.
Riddle me this: did I just get lucky, or do any of you have a cash offer?
No, I don't have a cash offer.
You take the pot then. Is that how this works? Is this like real estate poker?
Yeah.
So I have a bunch of 3.5 downs. Not terrible, but this one, for instance, has 0 proof of funds. This one, the pre-approval like yours is kind of generic. They still need to verify income and assets, which doesn't really help us. This one is willing to pay $1,500 over the appraised value, but they don't have the funds to do that.
But if they could, they would.
I don't know where they're getting the funds from. They can't show it. This one has a proof of funds that the name does not match the buyer. It's actually a corporation, so it could
maybe
still be them, but they'd have to show us proof that
Right.
name matches this account. This one looks good, but the agency disclosure inside of the RPA was just completely left blank. And they also didn't initial liquidated damages or arbitration. That could be a mistake.
or
So
it
I'll
could
have
be
to,
intentional.
so I'll have to follow up with that, because those are kind of the red flags. But then I have the big daddy here, which is it's the cash offer. I've double checked. They've already waived the appraisal and loan contingencies, which is what you should do with a cash offer. Inspection contingency 17 days, pretty standard. I'm going to close in 30 days. He's showing almost enough funds to be able to close. He's got proceeds that he got from the sale of his house. But the additional funds, looks like another 15,000, 20,000 is going to come from his retirement account. So we do need to follow up with that and make sure, are there going to be penalties? How long is that going to take? That kind of thing. Make sure that they're all aware before we go ahead and run with this.
I have one like that. So the buyer's using most of the funds to close this escrow is coming from a 401k. I'm real interested in making sure that one works out good, because last time we saw this happen, their house was actually on the market. They were saying we've got the money in our 401k, but what they were really going to do was delay the closing because they want to close the escrow on their house. So anything to get an offer in. So I think, we need more information on this. It could be a maybe, but right now, for what I'm seeing, and all of the funds coming from a 401k, even if they are, we know the downsides of that too. How long, which 401k, how are they going to release it? And then, of course, the buyer ends up having to pay that back. How do they plan to do that in a year or two? So
I have kind of my top contender.
I have one and a maybe.
I couldn't hang my hat on any of these.
Ouch. Okay.
Yeah. But seller will see them, we'll present them, but
Yeah.
no, there's just too many holes.
Okay, well, I think we have our top
Cool.
3.
Our homework is done. We've done our due diligence. We've prepared, and the next step is presenting these to the sellers. So in doing that, we'll take all these 15 offers together and summarize them on one sheet of paper, one cover sheet, to let the seller know what they will be seeing. They're going to see every offer. They have a chance to select any of these offers, because any one of these may, on its own merits, be the strongest for them. Whether it's terms, whether it's conditions, whether it's price, they'll have a chance to choose. And so now we'll do that on one summary sheet and off to see the sellers.
When a market is this crazy like it is, you hear a lot about sellers getting multiple offers on their homes. And that puts them typically in the driver's seat. They get to make whatever choices they want, puts them in a position of power. So a lot of times buyers, in an effort to take back some of that power, will put out multiple offers on different homes. They may go out and see 10 homes. They like 4 or 5 of them. They'll submit offers on all 4 at the same time. And so there's a couple things to think about when that happens. One, as a seller, you have no idea. Now you've chosen your top 3 offers out of all these multiple offers, but you have no idea if your number 1 offer is you're actually that buyer's number 3. And so you could go, this is a great offer, I want to take that, I don't want to counter any of these other offers. You get back to them and they say, well, we're just going to wait on you because we still have 2 other houses we like better. So it does take some of the power away from the seller. From a buyer's perspective, it can also be a little hairy. If you put out 4 offers at the same time and you get counters back on numbers 3 and 4, but you don't hear back from numbers 1 and 2, what do you do? Do you take 3 or 4? Do you wait another couple days to try to hear back from 1 and 2? And in the meantime, 3 and 4 disappear? And then you're back to square one? So it does happen. I totally get why it happens, but it can make it kind of cloudy for both sides. You have to offer over the asking price in today's market. It's just a sad truth. Some of the things that come with offering over asking price, let's just throw some numbers out. If a house is listed at $500,000, you're going to offer $540,000. You're going to come in real strong and try to get your offer accepted. That's great, but you have to look at it this way. So what we typically think of is, look, if the house is listed at $500,000, then it should also appraise for $500,000. But if you offer over that, then that's the buyer's responsibility, the person that made that offer, to have enough cash set aside if that appraisal comes in lower than their offer to make up the difference. So if the asking price is $500,000, you offer $540,000 and the appraisal comes back at $520,000. We want to know that you're going to have that $20,000 to make this deal happen, because after all, you made the offer. And so typically in a situation like this, we'll look to make sure you have all the qualifications, you have your down payment, you have your closing costs, everything needed to close the deal, plus an additional $40,000 just in case that appraisal comes in at the asking price. Man, so this is a hot topic right now, and it's a tough one to talk about as a licensed real estate agent. A lot of people are removing their contingencies with their offer to get it accepted. Unfortunately, in today's market, sometimes that's just what's necessary. It does put you at risk. There are a few other ways you can try to protect yourself, but you're basically at that point, if you remove all your contingencies up front, whatever the amount of your deposit is, you're basically paying that amount of money to attempt to buy the house. If you put $10,000 deposit and remove all of your contingencies and then find out that it needs a new roof and you decide you don't want to buy that house, you back away and you just paid $10,000 for the opportunity to try to buy that house. So is it a necessity in today's market? A lot of times it is. Is it good advice to do that? Is it sound, solid advice? Is it advice that I would give to my family? Not a chance. Okay, so now we're back. We just presented all of these 15 offers to the seller.
Yeah, that wasn't short.
No, it takes quite a bit of time, and the reason why is there's a lot of information. When you hit people with this much information, typically there's a lot of questions. So we want to make sure they have all the right information.
It's a big deal. I mean, they're selling their house.
Yeah. And so we decided to do multiple counters. When you do multiple counter offers, there's a couple of different ways you can do it. One, you can send what's called a highest and best to all of the offers, which gives them one more chance to come up to their highest and best. Another is you can send the same specific counter offer to all of the offers at once, giving them the same price and the same terms to meet up to. Or you can send a specific different counter offer to each of those offers, depending on what they look like.
So the sellers decided to go with the top 3 that we thought were the top 3. They all ranged in price and terms, so they were completely different. So we decided to do separate multiple counter offers to everybody, kind of the last one that Cole talked about. And so now we will send those counter offers out to those agents and buyers and see which ones come back, and then our seller will have an opportunity to choose from the 3 of those and take the one that works best for them.
It's been a long day at the office. We just sent out our multiple counter offers. to those buyers, and now we're just gonna wait to see how the buyers respond.